Well, hi everybody, and welcome to another market report we are actually in May the 4th. It's actually Saturday. I'm doing this. As you can see outside, it's a lovely day. A little bit cloud, but lots of people hovering around Squamish having a little bit of fun today. So a little bit different than what I've been doing recently because I wanted to do a little broader view on what's kind of happening in the market and what is happening with regard to real estate in Squamish and how things that the government policies are coming on and how it's going to impact housing and what we see for, I would say, the sort of longer term view here. From those of you that can see that are watching the one that was created on the computer are going to see the topics I'm going to talk about. If you're watching on a phone and you're just watching the quick updated version, you're going to see just myself talking. But anyways, the biggest thing that we always talk about with housing prices is interest rates. And interest rates are a big deal. But the government's really stuck. They can't really be reducing the rates based on what's happening in the economy. However, they're going to be forced to reduce rates because for the longest time, as everybody knows, they've been predicting that they would be reducing rates. And as soon as the government says that, hey, we're going to reduce rates, the expectation of people is that that's what's going to happen. Now, the government can postpone, they can tell people, oh, we're going to have to hold off, we're waiting for the data to come in, which is what they're doing right now. They're saying, hey, we don't have enough data to make this decision yet, blah, blah, blah. But it gets to a point where people are anticipating and expecting that the rate is going to have to drop. So the government is going to have to do a 0.25 drop. Maybe it's in the next meeting or perhaps the meeting after that. But then they can't do anything in the States because of the election coming up. And in Canada, we're just at a point where they can't do it because it's going to cause such an impact on inflation. It's going to cause such an impact on housing prices. It's just going to cause a massive problem. So when you look at the interest rates, you have to think about the fact that when they reduce them, they're reducing them from 5% to 4.75%. 3 years ago, when people were, 4 years ago now, actually when COVID was fully entrenched, they were getting rates down to like 1.7 on mortgages. So those are all going to be coming due in February 2025 and beyond. So there's going to be a stretch where there's going to be a lot of mortgages coming due. Now, when they come due, people are going to be renegotiating their 1.7% mortgage at 5% or 4.75. Again, it just goes to show you that that 0.25% drop doesn't make a big difference. However, to give you some sort of more scope into that, realize that with the expectation that interest rates were going to drop, we saw very little activity in the market for a short period of time there, which is normally a hype spring market, and it didn't really happen this time around. So with the market not having a big spring market, right now as we start going into early summer, the activity is picking up. So what's I think is happening is people are going, they're not going to reduce rates. If they do, it's just going to be a quarter point. Who cares? If I want to buy, I just got to buy and move on. And so buyers and sellers are accepting the new norm. And so that's a key, that people are just accepting higher interest rates are the new norm, and that's what they can afford. Again, go back to COVID and realize that as a realtor, when I was selling properties during COVID, at that point and for the next year after that, people were maximizing the amount that they could borrow because, hey, it's cheap, it's free money. Let's maximize how much we can borrow and let's buy the biggest place we can. That attitude makes it so that now when the mortgage rates go up and they've got to renegotiate, if their income hasn't changed substantially, they're not going to qualify for a new mortgage because they were at their max borrowing capacity at 1.7%, 2%, 2.2%, and now they're getting twice the amount of interest payments that are going to be coming off on their mortgage. This is massive. It's not a small thing to sneeze at. Like, it's going to have an impact. So the government obviously is going to have to reduce rates. You're probably going to see a 0.25% reduction. You'll see a second 0.25% reduction. Rates will go up again. And then coming around February 2025, they may have to reduce them again because of all the people renegotiating their mortgages. It's going to cause a little bit of a problem. So sort of keep that in mind when you're looking forward. Another major thing that's happened over the last little while, a few weeks, a couple of months, is that new policies are being put in place. Now, I'm not going to go through each of the policies specifically, But the big things that are happening is landlord and tenancy rights are being changed dramatically. When that happens, it's always going to be in favor of the tenant or slightly more in favor of the tenant, which is what is happening. So for example, they're taking off now when you evict a tenant. It used to be for personal or family use. Now it's only personal use. So you can't evict somebody if a family member is going to live in there. So mums and dads helping their kids, if they're actually the ones on title, technically they won't be able to evict because they're not the ones moving in. They're not the owner. So that's going to be difficult. So there's going to have to be a lot of ways people are going to change the way they're going to have to write contracts. That's going to happen. And tenants are refusing to move out. So they can put it to the RTO and say, hey, we'd like to get a new, we've been evicted. We don't think it's right. We'd like to dispute this. And so now they have up to 30 days to challenge that or dispute that ruling. So when you book it, right now they're at like 10 to 12 weeks. It takes them to review any case that comes forward. That's a fair bit of time. I mean, we're talking, 3 months for them to even get to the point where they have a panel where they will look at the dispute, which means the tenant in most cases is refusing to pay rent over that period because it's in a tribunal, because they're actually going to dispute it. The tenants aren't paying. So the landlord is without their money for that 3 months while they're waiting for a dispute to be held. Then once the dispute is, decided upon, when the RTO decides on it, sometimes the tenant can go back and say, oh, we actually have another concern that we'd like to bring forward, and then hold it off for another 60 days, 90 days until they get their next resolution meeting. So you have to understand that everything's sort of really going in favor of the tenants. That's a big issue. So it's making it difficult for investors to get people out. It's making it difficult for investors to sell their property. And then our beautiful government comes along with the idea that let's increase the capital gains tax that people are making on secondary properties by changing the inclusion rate from 50% up to 67%. That means if you make $250,000 on a property that you've purchased, you're no longer paying on 125, which is 50%. You're paying on 67% of that, which is whatever it is, probably 162 or 170,000. You're paying on a lot more. So you're paying tax on a lot more of that money. And if you're in a higher tax bracket, which you will be if you've got capital gains tax, now you're going to be paying on 40% of that. It could even bump you into a higher tax bracket and cause you to have to pay more taxes on your personal income tax. So it's a massive impact to a lot of people. So investors are now going, I don't know, we're not going to buy investment properties anymore. Now is not a great time with all the changes in policy. We don't know exactly what's going to go forward. So investors are typically sort of holding back, maybe going to list their properties for sale. Some people are trying to get it in before the inclusion rate change occurs on the taxes. So you're getting people that are trying to sell before June 25th. Now, they would have had to complete a little bit earlier. So anyways, people are going to get taxed more. And that means less profit for the guy who's investing, which means less investment, which means less rental properties, which means less buyers competing for properties and more properties coming on the market. So that takes us to a sales active ratio. And when you look at the sales active ratio historically, when prices have stayed flat, so those of you again that are looking on the computer version of this are going to see the sales to active ratio, and you're going to see that when it changes, the HPI changes versus when it changes. So this is when prices stayed flat right here. So prices are flat from sort of 2008 straight through to 2014. Now, if you go to the sales to active ratio, it was also really low during that period. So prices stay low because the sales to active ratio, which means there's more active properties coming on the market than are being sold at a period of time. So you're getting a higher inventory, you're getting less properties being sold, more properties coming on, which then puts downward price pressure and keeps the housing prices fairly stable. Now, when it spikes up like this, you're getting a massive influx of buyers coming in. You're getting a massive increase in sales, which means you're getting a decrease in inventory. The active number of properties coming on the market is decreasing. That causes a massive acceleration in prices. So you can see on the chart, if you're looking at the chart, we had this area here that was flat, and we had this area here that was flat. So the 2008 to 2014 we've just gone over, and then 2018 towards the end of 2020, not quite into 2021, the sales to active ratio dropped dramatically. It never got down as low as it did in 2008 through 2014, but it did come down off of highs fairly dramatically. So keep in mind that during this time here, 2016, 2015, tons of properties were being sold, buyers were drying up. So you're creating an environment that's causing downward pressure on prices again and keeping them flat. We spiked up again, and now we've dropped dramatically again. So what is all this pointing to? This is pointing to the likelihood that we could maintain stable prices for some time to come. Specifically in Squamish, there's such a demand for people to live here. I mean, let's face it, Squamish is one of the best places probably on the planet to live. It's got so much going for it that people are still always going to choose to live here. We have such a limited building capacity because there's no new developers that are looking at the land at the price that it's at to come on the market. People are willing to pay exorbitant rents to live here because it's just such a beautiful place to live. So there's still always going to be that demand, but that's going to be quashed by higher than normal supply coming on the market. And what it'll do is it'll keep prices fairly level. So you might see a 5% increase, you might see a 5% decrease, a 3% increase, a 3% decrease. But it's likely that over the next few years, unless there's some major event that occurs, positive or negative, typical like total control of inflation or a war or something that has a dramatic impact on the economy, that could change the narrative of this story. And obviously the narrative is open for change. I mean, if the government comes along for whatever reason and decides to cut interest rates in half, it's going to have a massive change on what's happening in the housing market. So we don't know what's going to happen in the future, but right now, based on where we're at, based on what's happened in the past when we've had a major drop in the sales to active ratios like we're seeing right now, there always seems to be this 3 to 5 year span where housing prices are fairly stable, everything consolidates. Once it's consolidated for a while, we get on a new bull run and housing prices take off. So keeping all that in mind, remember that the likelihood is that prices will probably say a little bit more stable. It's a great market to be in. It means that you can buy without having to panic and buy. And if you're selling, you can hold out a little bit longer. So there's benefits to both buyers and sellers. It becomes a more efficient market and there's less panic in the market. And that makes for a better buying process for everybody. So that's what I think is going to happen. That's where I think we're at. You can see why I think it was necessary to do a longer presentation today, just to make sure everybody understands the dynamic of what's happening in the market and as well as where we're headed. I hope you find this useful. If anybody ever has any questions, feel free to reach out to me, Simon at simonhudson.ca or 604-892-8155. Subscribe, like down below. Let me know what you think of the video. If you have comments, let me know. I'd love to hear them. If you ever want to call and just chat about the market, I'm happy to talk anytime. Take care, everybody. Have a wonderful weekend, and we'll chat soon. Bye for now.